Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn, managing director on Nasdaq's market intelligence desk. We're going to take a fresh look at the S&P 500 on a number of charts. Chris, as always, great to wrap up the week with you. This is always my favorite hit because I know we're going into the weekend, and I don't know about you, but what a week it was. There was no shortage of headlines this week.
No, there hasn't, but there's only been one major headline that's been a continuous thing that's only mattered for the last 2 weeks, and that's tariffs. Yep. And what's coming out of the White House and what's coming out of China is back and forth and rolling the markets. But what you're seeing is really we're only down about 80 points in the Dow for a 2-week period. The S&P is not that far off from the all-time high that we hit at the beginning of the month. And what you're looking at here is fear trading, as opposed to investors putting their money at the market to work. You know, it's all about, people want to be, it's all about the gains, but it's never about the pain. And what you're seeing here is a little bit of pain on a day-to-day basis.
I mean, we just came out of first quarter earnings. It's like fundamentals didn't even matter.
You know, 90% of the S&Ps reported already. We're coming into the back half of the earnings cycle here, which is mostly retail, which bodes very well because you've had some very good numbers out. Consumer sentiment, retail sales have been okay. You're looking at a strong economy, low employment, high wages, people want to spend their money, but the question is what they're spending them on right now.
Right.
So we're going to find out over the next 2 weeks with the retail sales, and there's a lot of good companies coming out. You get Target, Kohl's, Urban Outfitters, so there's a lot of companies that are going to give you good looks at different segments, whether it's online, big box, or mall, and you're going to see where that spend went. So that's going to be where we're going to take a look and how that's going to finish off. But the markets as a whole, volume's still right in line.
Yeah.
You know, trading volumes, it's really not that, you know, like Q4 Christmas, right? We were doing 10 billion shares a day the week of Christmas. You had a 45 handle on the VIX. You know, we only had one day this week trade over 8 billion shares on the consolidated tape.
Yep. And when all else fails, just, you know, start talking about Fed rate cuts, and there goes the market. Anyway, let's take a look at a couple charts here. We have some numbers to go over.
There's a lot going on.
Let's pull up the 52-week on the S&P 500.
So this is a great chart, and it kind of is a good synopsis of what we've been talking about. Well, if you had the luxury of reading our midday note today, Mike Sokol did a good job talking about retail, talking about sales, talking about the S&P, and more importantly, how you've seen some recent fear in the market, but you've snapped back. Monday night was a very scary day for the S&P. You saw a big sell-off across the markets as a whole. You had high volume. But then again, you start talking about the Fed. You're talking about potentially working through some of the tariff cuts. We're still talking and everything else, and you see it snap back. So if you look at the chart, you see the V bottom that we've been talking about for weeks off of the December lows, right off of Christmas Eve. And if you look over there by Jill, you'll see it rebounding back. You see the moving average on the 50-day at 28.69 essentially. We traded below that and snapped back over the last couple of days. And today we're essentially flat on the day after being down over 0.5% out of the gate. So what you're looking at is a buy-to-dip mentality on lighter trading volumes, which tells you that there is no conviction in this sell-off. None. Right now, it's just fear posturing, headline trading, and you're seeing it on the S&P stabilizing here at the 50-day moving average from the very near
All right, let's take a look at the S&P 500 on a weekly chart.
Right. So this is capturing the last 5 days of trading. You look over right here by me, you see the Monday sell-off on the higher volumes, and then you see the slow movement back and forth, and you see the trailing moving averages. And what you're looking at here between yesterday, you see the trade talks right there coming up, being headlined, and then this morning at 11 o'clock, Trump came out and saying, you know, we're looking to work through the tariffs with Mexico and Canada. That's going to be ended, and look at the market snapping right back there. You're looking at an excellent move in the S&P. If you bought it Monday on the dip and you're looking to capture a momentum trade here on Friday, it's a nice transaction.
I mean, just look at it going into the close. It's just straight up the last
You
hour,
buy
it seems.
every day. You buy the dip. You wait for it. You buy the dip, and look at every day across the board. You buy the dip, and it rallies. You know, and what you're telling you is a trader's market, not an investor's market, because at the end of the day, we're still trading near all-time highs.
Yep. All right. Let's look at the S&P 500 and some fib levels. We haven't taken a look at this in a while. Before we go there, for some of our newer technicians out there, what are fib levels, Fibonacci levels, and why do traders take a look at them?
So what you're looking at on a Fibonacci retracement level is a low to high scale from the 52-week or whatever the period that you're looking at, the peak high of the stock to the peak low of the stock. and you're using a measurement to see how far it can retrace back based off of investment levels. And you're essentially looking at a 23.6% retracement down to the half and then down to the 0 level. And what you're looking at there is you take out any type of volatility between certain price points. And with that, you're looking at support levels, resistant levels, and technical trading, potentially programs that can be kicked in when you hit certain levels. This is why it's important to not really understand it as much, but be aware of it. Right. So what you're looking at here with the S&P is a 2-year weekly chart. And if you look at it, it looks very, very good. You again see the big dip, the big move up over 2017, the flat movement, the move higher in early 2018, the sell-off in December. But look where we are right now. We're back at all-time highs only 2.5 weeks ago, and then you see the dip. What you're seeing is a very bullish candle filling in at the 76.4 from the low, which is only 23.6% from the high, which is almost a perfect stop on the Fibonacci level, which is showing that technicians are buying the stocks in the S&P on the weekly basis here. And when you go back to the weekly chart, you saw exactly that. You bought the dip, you rallied it back up. So what you're telling you here is a trader's momentum, not an investor's momentum. And with that, until something significantly changes on a technical scale, people are going to be buying the dip and selling it out over the course.
And that's why they tell you to stay invested and stay diversified, because in markets like this, if you're not in front of a terminal all day long like you guys are, you know.
It's not that obvious all the time.
Let's wrap it up here. The week ahead, I'm going to be in Vegas. Lucky me.
You.
I'll be at the EQ Derivatives Conference, so you will be at the helm with Leanne. What are you going to be looking at? It'll be a little bit quiet because we're going to Memorial Day weekend.
It is. So you got the conference schedules kind of coming into full swing here. A lot of conferences, as we mentioned before, the tail end of earnings on the retail side. Not a lot of economic data coming out, but we do have durable goods on Friday right before Memorial Day. Again, Memorial Day is only around the corner. So the question is, was it sell in May and go away? You had days where you sold off, but the market's rally back every day. I don't know if that's going to continue or not, or maybe we're going to have to retire that saying. But the volume's telling me that the markets are still in a rally mode.
All right, my friend. Have a great weekend. All of you have a great weekend. I will see you in Las Vegas next week. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.